Hey everyone, and welcome to our earnings cheat sheet for Friday, February 14th. It's Alexis, Garcia, and Ed Carson here, and we'll take a look at some key upcoming earnings reports to help you prepare for the week ahead. And Ed, we got a lot of retailers today, hoping maybe to snatch your heart here on this Valentine's Day. But what's on deck for us?
Yeah, three very different retailers, Walmart, Alibaba, and MercadoLibre.
All right, well, let's see how sexy some of these earnings previews can be. Let's start with Walmart, which is scheduled to report Q4 earnings on Thursday, February 20th. Earnings are expected to rise 8% to 65 cents per share, and revenue is seen climbing 45% to $179.94 billion. That can get you some eggs. And here's why we're watching Walmart. We'll be looking for any commentary about the strength of the consumer, and we'll also be on the lookout for anything about tariffs. We'll also be curious to see if Walmart gained market share during the holiday period. So, Ed, we saw some headlines in the last week. Walmart, obviously, huge retailer, one of the largest private sector employers in the country. But Amazon is expected to leapfrog Walmart in quarterly revenue for the first time ever. And we saw an earnings beat last quarter. And if you want to talk about like really consistent sales returns here, Walmart has averaged about 5 to 6% over the last 6 quarters. So what's on your radar with Walmart?
Yeah, I mean, Walmart may lose the crown to revenue to Amazon, though obviously a lot of what Amazon does is not retail or even e-commerce. But Walmart's been doing a pretty good job. They've figured out growth, and part of it's they're doing well in e-commerce, and they're doing and some of the related things like advertising, related on e-commerce, and so they're doing some good things on that front. And it's just solid performance. They've double-digit earnings growth the last few quarters. It's supposed to be double-digit earnings growth next year. So yeah, I just wanted to look and see about how that's going. I mean, I think they've just figured out a sweet spot. The consumer's doing all right, not necessarily great. That's a pretty good environment for Walmart, and they deliver value, done it for a long time, and so yeah, I just want to see if those positive trends can continue for Walmart and the consumer.
And this is one of the first wave of retailers reporting this week. So what could those results kind of maybe tell you about the economy right now?
Yeah, I mean, look, like two-thirds or so of the economy is consumer spending, and goods are only part of it. I mean, there's plenty of services we spend. I mean, certainly all the internet costs and streaming costs and everything else services, but it's still a huge amount. Just get a sense of really the state of the consumer and what they're seeing there. It'll be interesting to see about what they might have to say about tariffs, if they think that prices are going to come back up or not. And they may not want to say much, and they may try to be. They'll probably say. So I've seen some comments from other folks saying we're learning to understand, trying to understand what these possible tariffs will mean for our customers rather than saying something flat out. But I think that's really the kind of things that we're going to want to find out, get a sense on some of those things. Just, yeah, how is the economy doing?
All right, well, let's take a look at the chart because Walmart broke out of a flat base with a 96.18 buy point on January 27th, and it's extended from that buy zone. You can see the nice run it's really had since it powered back above this 50-day line here on January 16th. It flirted with it intraday, but really nice action here for Walmart.
Yeah, it's a little extended now, but also one thing is that relative strength line. When it first broke out back in last May, it's like, well, the relative strength line hadn't really gone anywhere for a while. But since then, the RS line has been moving up. But that shows you it's been outperforming the S&P 500. And this is sort of, it just hasn't something that it hasn't done for a while. This isn't, but the people are confident in that growth because that growth, it was, been pretty meager for a while. But then you see this double-digit growth, and that's really paid off. So it's extended now. Not much you can do with this. There's not really, it's not pausing. There's not a 3 weeks tight. If it came all the way down to the 50-day line, well, yeah, I'd be doing that, but it would be look sort of ugly. So it may be a while. But I think anybody who owns this, they probably bought it. They're probably, it's about, 9% from the pivot. So they have a decent cushion maybe for those who bought it there. Certainly if they bought it earlier, an early buy point or way much earlier. But I don't think there's anything you can do with it now.
Right. And we can see here it's about a little over 10%, that 10-week moving average. We're on the weekly here. And as you mentioned, some nice double-digit earnings growth over the last few quarters. And we can just see this consistent sales growth as well in the 5 to 6% range for Walmart. Any other aspects about the fundamentals that are sticking out to you while we're here on the weekly?
Yeah, I mean, it has it's just been consistent. This is not going to go wow you, and it has gone on a solid run. That is something to consider. This has gone, it's basically doubled or more since the end, late 2023. So that is something to keep in mind. How much that can a company like this rise? But it's really been just sort of impressive performance from just an enormous company.
All right, well, let's move on and take a look at Alibaba, which is also scheduled to report Q4 earnings on Thursday, February 20th. Earnings are expected to edge up slightly by 1% to 266 per share, and revenue is seen climbing 24% to $38.1 billion. And here's why we're watching Alibaba. We'll want to see if executives give any confirmation of an Apple AI deal, and we'll want to hear how AI is helping the cloud business. And Ed, we saw some recent news this week that Apple AI deal moving forward, possibly. It looks like the Apple artificial intelligence features have been submitted to a regulatory agency there in China for review. So that could possibly be coming. And that's probably why Alibaba stock's been going gangbusters here the last week.
Yeah, I think this report isn't so much about the results. I mean, they matter, but I think people want to look going forward. Is the cloud computing business doing well? And maybe is there an AI boost? And yes, something about that AI news really could be help. And Alibaba, a few days after DeepSeek had that big news, oh, we got this model and it really hit. Alibaba said, hey, we've got a really good model too, that a new model, so that helped as well. So there's been a lot of momentum there, and there seems to be momentum behind a lot of China stocks. I mean, just in general, which really does matter, because uh, you know, I mean, we see it obviously in the U.S. markets. Look, when the stock market is in a downturn, most stocks fall. It doesn't matter how good the company is. And the same thing with China stocks is that China stocks have been struggling. There have been some up and downs. For whatever reason, they're rising. Maybe the Trump tariffs haven't been as fierce as people expected, what have you. But that doesn't really directly affect Alibaba. But obviously, if the stock market and the economy are weak, that's not good for Baba. But yeah, definitely want to see about the future. Are we going to see the growth return, especially on the earnings front?
And let's take a closer look at the chart then, Ed, because Baba stock powered above a 103.67 buy point, and it kind of a lopsided cup with handle base here on February 7th. And, it just has kept rising out of that buy zone. We can see how the stock has surged here over the last week on that Apple AI news. But I want to switch over to the weekly just to get a better sense because we can see probably not the chart of a growth stock we're really following right now, but we can see how it's really climbed above that 10-week and 40-week line here over the past couple months. So what are your thoughts here with the technical action?
I mean, I don't like straight up from the bottom too much. I mean, it can be a sign of power, and there's definitely power, but you can see there is no handle on this chart because it just sort of moved up. And I wasn't that excited by the breakout, which happened, I think, before the Apple AI news. It's like there's only a few days before earnings, and it turned out it may be enough. And just sales growth is accelerating. It's supposed to accelerate again, so that's a sign maybe you're going to see that return. It was, zero, like 149. It's supposed to be like, I'm not sure. We'll see because how that goes. We'll see with that. On a weekly chart as well, you can sort of see. Um, that it's coming up to key levels. This 120 level, you can sort of see that was a resistance area for a while. Once it gets past about 18 months and there's sort of a black bar, sort of in the middle or 2/3 of the way of the chart, you can see that there's a black line coming down, and that's 18 months back, sort of mid-year to the right-hand side, just straight up and down vertical right there. And that sort of like usually at some point people just sort of give up. Either they're just holding forever or they've already sold. So that overhead resistance matters less. But still, I think getting over this 120 level would be a key area. So, technically, I think if you could pause around here, like if you could, form a handle or a shelf somewhere around here, around the buy point, around the 120 area, then there might be another opportunity. But it feels pretty extended right now, even though technically on a weekly chart, it's just above a buy point.
And can you talk a little bit more? Because we've seen this pattern before with the China stocks. They can really rally and they can come down just as fast. So, what's kind of your disclaimer here for investors on how to handle China stocks?
I mean, they are going to move up and down, but that's sort of like with the US market. The US market moves up and down, but it definitely seems to happen with China stocks. There's always the risk that regulatory, that something can go back, that people were hoping for things that didn't happen, and that's part of what really disappointed people a few months ago. They ran up and then they weren't excited by the stimulus. And right now they're excited because the Trump tariffs aren't that high. Well, what if Trump says tomorrow, well, no, I am going to raise tariffs by 60%. I mean, so you don't know. There's that risk. We've seen crackdowns. The China economy, it's a little murky. It's not doing great. So there's a lot of reasons to be above and beyond, the usual risks. There have been opportunities. There have been times with China stocks have done well. Maybe this is the beginning. There's a number of interesting stocks, but yeah, there's still a lot of risk doing with China names.
All right. Well, always good to just keep that in mind. And let's go ahead and move on to Mercado Libre, which we think reports earnings on Thursday, February 20th. That's the date on the company website, but they haven't confirmed it yet. So just a little caveat there. The Amazon of South America is expected to see Q4 earnings jump 143% to 790 per share. And analysts expect revenue to rise 37% to $5.82 billion. And here's why we're watching Mercado Libre. We want to see signs of recovery in Argentina, and Brazil is the biggest market for that company, and that country is trying to recover economically. But Mercado Libre faces a lot of rivals there. So, Ed, last quarter earnings were below expectations despite a sales beat. But it looks like investments in shipping operations and credit card originations kind of bit into the profit for that quarter. But what else is on your radar with Mercado Libre here as earnings approach?
Yeah, that's happened a couple of times over the past couple of years where it's just like there's a surprise miss, and it feels like their operating business is doing pretty well, but there's big investments or something comes in that isn't a lot of fun. And this is definitely it's a Volkswagen, but it is a strong growing company. Like, okay, set aside some lumpy quarters, there's some big growth in there. So that's really they found a way. They're big in e-commerce, but they're in while a lot of other e-commerce firms are e-commerce and cloud computing, this is more e-commerce and payments. So they're pretty big in payments. One of the processors there, they do a really good job with currencies. I mean, they handle it pretty well because you have to worry about all sorts of currencies that they're in their markets, and you never know how they're going to react to the dollar. I don't know how they do it, but they don't usually whine about currencies too much. Where anytime the dollar rises, U.S. companies seem to complain, "Oh no, everything's going terribly." This is just such a fact of life. I don't think that it just simply is. Yeah, so I want to see that growth. They are competing against, as you were alluding to, they compete against C Limited or C, which is Southeast Asia, but they're pretty big in Brazil too. And I think PDD Holdings Timu, which we obviously are aware of here in the US, but Timu is also a competitor. So, along with Amazon. So, there is a lot of competition in some of these markets that Mercado Libre is in.
All right, well, let's take a closer look at the chart, Ed. I'm on the weekly here, and Melly stock's been in a long consolidation with a 2161.73 buy point. We saw a nice kind of upside reversal here above the 10-week line last week. But give me your thoughts on the technical action developing.
Yeah, this chart is not very pretty. I mean, this base, let's be clear. I mean, it's showing some strength recently, but it sold off really hard on that earnings miss. And then it tried to recover. It's like, okay, here it comes. And then it sold off. It's not unclear all the reasons why. Maybe it was just wasn't ready. I think there was concerns about Brazil's market. A lot of Brazil stocks sold off at that time. Brazil stocks are coming back up. Always a risk there, but it's coming back up. And if you go to a daily chart, because it's hard to see here, you can sort of draw a trend line, sort of, and it sort of have to like sort of cut into that 2146 day and try to go up to the ones that we got to the highs. Like there's, yeah, something like that and go across there. And so it's doing something there. It sort of got above there. It'd be nice if it could pause. It would have been nice if it had shaken out or a little bit more 2000, but it's moving up. So it's not really a handle either. I don't know. A handle could form, but it doesn't seem to be providing a lot of great opportunities. Yeah, you could have bought it when it went above the 50-day line, but again, that chart is just messy. It doesn't mean it can't work, but it's just, it's just like somebody who's a little messy with their, their planning, it's just like, guess what? If you look at my notes, it's like I'm going to miss a meeting or two because I'm not paying attention to that. And it's just a little, just reduce, it's the odds of success. But you can look at the numbers, really strong growth. That 9% earnings were terrible, but you can look for the year, it's supposed to be 72%, then 32% next year. Uh, they're a real powerhouse now. If the competition bites, or if Brazil's economy is in trouble, or Argentina or Mexico, those are its biggest markets. But it's done really well. So it'd be nice to see this set up again. Um, but the chart isn't particularly pretty right now.
Is that why maybe we're seeing volume here not as high as when that sell-off occurred here back a few weeks or a couple months ago? But yeah, it seems like volume's kind of light as this has moved up.
Yeah, there's one or two decent days in there, and the volume, so but yeah, definitely nothing like we saw on the way down. There's real power on that sell-off, and haven't seen it on the way back, which is another reason really would like to see a handle, because it's one thing if a stock really shows power and there's lots of volume, you might be more tempted to buy without a handle. But it's just like, well, that's another reason why you'd like to see this pause and collect itself.
All right, Ed. Well, those were some of the big names on our radar for this week. There's always more. There's always more.
There's
And
always more.
as for Valentine's Day, we want to give you the world here on earnings cheat sheet. But let's stay in Brazil and let's check in on new holdings. Also, finance banking platform there. And again, this one building the right side of that cup base with a 1614 buy point, pretty deep cup, 37% depth here. But again, kind of looking a little bit messy here as well, maybe.
Yeah, and this has had a tendency to break out and then fail, like, or really have a high risk, there. The prior base, there was a move for a while and then it really sold off. I mean, it's just so this is one that's tricky here. Pretty big sell off here, probably resetting the base count because of undercutting the prior base. There was weak earnings. Then the Brazil news, a lot of high volume gap down. So that's an ugly looking left hand side of that base. Right hand side, the volume. There's been some good volume days, but nothing like we saw on the way down. So a handle looks like it could be forming here. It's just a question is not only would it be a breakout, it'd be breaking out right into the resistance of that prior base. So there could be a lot of people who bought around 15 that might be saying, hey, I want to get out. So that could be some area. This one has interesting growth as well. Look at the growth is nice. This is, like online banking. One nice thing of that is that in a country like Brazil, it's relatively well off. It's a middle income country, but a lot of people are not banked. So there's a lot of growth. Whereas like if I tried to set up an online bank, it's like, well, everybody else has already got a bank. It's not, it's just a little bit of a growth opportunity in some of these other countries. China went through that, and this is an opportunity, and MercadoLibre to a certain extent. So that's one reason why people are high on it. Warren Buffett owns a decent stake in this one, so that provides some kind of institutional feeling about this one. Uh, but yeah, it would be nice if there's definitely flaws too.
All right, well, that was new holdings. They're scheduled to report February 20th. Let's take a look at Arista Networks. That's scheduled to post on February 18th. And again, we had this breakout back here in September 2024, but looks like it's now below this 50-day line, and would be nice to see it get above that key resistance level.
Yeah, I'm just not sure where. This is a broken chart, and there's a lot of charts like this. Yes, getting above the 50-day line, maybe setting up, but this feels like it needs more time. Seems like a lot of those stocks. It sold off recently, like earlier this week, because I guess there was insider selling. But we've seen some other names that had earnings and then they dropped below. It just needs repair time. A huge winner, maybe it can come again. I definitely would think people should be paying attention to it, but I don't really. It doesn't seem to have a really good buying opportunity, even if it did have a powerful move.
All right, well, let's take a look at Cadence Design Systems. They also report on February 18th. And same thing here, we kind of see this cup with handle base, but on the daily chart, it doesn't really look too much like a handle, but it's really kind of faded off what is potential 325.03 buy point.
Yeah, this is sort of its software, but it's chips. So it's in that it's messy. It's messy. The relative strength line is sort of weakened over this time. It used to be a real leader, for a long time, like on a weekly, had a long, steady uptrend of the relative strength line generally beating for year after year, but it hasn't done well. And while the weekly chart doesn't look quite as messy, it's below the 10-week line. It still looks messy. It doesn't look good. And just sort of can it turn around? And that one, I mean, it may do something, and I'm sure somebody would say, "Hey, why didn't you? This is action." Well, maybe it works, but it just seems like not a great looking chart.
All right, well, let's take a look at Booking Holdings then. They report on February 20th. I'm still on the weekly here. This chart looking a little bit better,
Yeah.
building a cut base with a 53.37.24 buy point, getting back above that 10-week line this week. So, what are your thoughts here?
Yeah, doing pretty well here. I think, its rival Expedia doing a little better. That one gapped out of a base on earnings last week. Um, so that one punched up, and that probably gave Booking some help. But Booking is around an area like on a daily. There's probably something like if it can get above some recent highs, that would probably serve it to be above the 50-day line, but above those recent highs would probably serve as sort of an early entry. I wouldn't do it before earnings, but this is going to, the relative strength line has faded a little bit, but that's after a decent run. It's got some pretty solid growth. Definitely one to watch. There are a lot of things in the travel space that have been acting well, but this is definitely worth watching.
All right, well, let's take a look at Carvana. They report earnings on February 19th. Again, this one in consolidation with a 268.34 buy point, but really kind of looking like a V shape here, Ed, and looks like it broke out on February 11th and still technically in a buy zone. So would you be buying here?
Well, the funny thing, I own this. I sold everything. I realized now for the show, like I have a couple shares in like a smaller account that I didn't sell. So that's good. I'm glad I didn't sell those. But it'd be nice if this one to me, like if it came down, because the rebound there was sell off for various reasons, and partly there was a short seller report. Didn't seem that harsh. It seemed to be more of a rehashing, but whatever. It's bounced back, but not on much volume, especially once it got to the 50-day line. So that's something I'd like to see it pull back a little bit. But yeah, it's doing pretty well here. It's this one tremendous earnings growth. It turned profitable. It's like losses, enormous losses. It's come back. It's also come a long way. Had a huge run over the past year and a half. So maybe it'll need a longer break. I just heading into earnings. Yeah, it'd be nice if it could come back, have a little bit of correction, but we'll see.
Right. And on the weekly here, we can see that turnaround here with earnings and sales growth looking pretty impressive as well. Let's wrap up here with Garmin, Ed. That company reports on February 19th as well. We are still on the weekly here. It looks like it tried to break out of this tight area, but is now trading below the 10-week line.
Yeah, it looks like it's lost its way a little bit. This has had some decent growth. As you can see, there's like really strong growth in the latest quarter. So that's been pretty solid. Could we go to a daily? I'm just trying to think. There was looks like it was trying to break out. There was tight period, so it did break out, but immediately failed. That's not great. Now, technically, I went to the 7 to 8% sell zone, though it did sort of close well those days. So maybe if it went back up, it could, but if it really made a strong move over the 50 line or waited to the buy point, you could, but it's not great action either. I'm not, it's just not very, why did it do that? And there was some volume on that. And yeah, I know that there were some days that the market came off, but the general market has come back, whereas this one has not so much.
We can kind of see here past earnings. This one looks like it really tends to move a lot on those earnings reports. So maybe something to keep in mind there as you're watching Garmin stock.
Yeah, definitely a reason not to get too excited ahead of earnings or to do it with an options play. But yeah, that's a good point. You need to know the character of stocks, and this one seems to move and then not necessarily move a whole lot between earnings. And there's definitely companies like that.
All right, Ed. Well, that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune into Stock Market Today with Alyssa Quorum. That goes live after the closing bell. Have a wonderful Valentine's Day, and we'll see you all next week.